moderate this panel today. I represent a lot of players in the space as a litigator, so I represent a lot of clients in the space, including the Brightmans in the Tezos ICO litigation, class action litigation. I represent a number of other entities involved in ICOs before the SEC or in other issues. So I would say very well-rounded experience in the space, representing people like Eric Voorhees, Roger Bear, Blockchain Wallet, Colonics, the Exchange, as outside litigation counsel. But ICOs is the hot topic this year for sure. And it's really exciting to have this panel here because I think we have a great diversity of experience, although it's all men. I did not put this panel together. So I would have put it together a little differently. No offense to each one of you. We could have maybe done it differently. So let's start off. Why does everyone introduce themselves? Go down the line here, starting with Milan. Cool.
Hey everyone, thanks for coming. My name is Milan. I'm from Germany originally. Moved here like 5 years ago. I've been in VC for 5 years and now started my own fund. It's called alphablock Capital. What we do is we get in super early before the pre-sale. So we touch anything that's post-seed. And our value is that we connect our portfolio companies, so a variety of corporates that we work with, and to developers. So as you know, developers is a big shortage. So that's essentially my pitch as why people would want to take our money. And yeah, it's a very exciting space, and I really, I think it's great that a lot more people are coming into the space. I think we need more builders, and yeah, it's exciting.
My name is Patrick Barron. I'm president of Ambisafe, based in San Francisco. We're a blockchain software company, been in the space since 2015. We have a number of solutions, a web wallet solution that's used for utility token ICOs, as well as integrated into platforms for tokens that actually function and will be used after the token sale. We have a cold storage solution. We also most recently launched a decentralized ICO hosting platform in decentralized exchange called orderbook.io. The most interesting thing about this project is that we program in the securities regulations around when tokens can trade, where they can trade, what checkboxes have to be marked in order for a token to be traded. And so we've written the law directly into the code to help ease the enforcement, to help ease compliance. We've helped launch 35 ICOs. We have 115 employees. We are, we've been in the space for quite a while, and yeah, pleasure to be here.
Hey everyone, Michael Hughes from Indiegogo. You might have heard of Indiegogo. We invented crowdfunding a decade ago. You're probably asking yourself why we're on an ICO panel. So in our mind, the quick story is when we launched, well, I did when our co-founders launched Indiegogo in 2008, they wanted to do investment from the crowd. Laws didn't exist to do that. So they invented this thing called perks or rewards-based crowdfunding. It's gone pretty well for us and a little company called Kickstarter that started a year after us. So we kind of stumbled into that business. The Jobs Act came along. Fast forward, we now have done equity crowdfunding for the last couple of years. It should be called crowd investing. So anyone can invest in companies now in Indiegogo. We've done about 50 or so businesses across all different verticals. We're partnered with a broker-dealer. We do it under securities exemptions, etc. We're starting to get where this is going. ICOs to us is crowdfunding 3.0. So crowdfunding's hard, ICOs are hard. We want to be the place to host ICOs, do them legally, compliantly, with a global audience, with the marketing power, with the know-how, with all of this stuff together, and show the SEC and everyone that there's a lot of interesting ICOs and projects coming out, building on the blockchain. We want to be the place where they can, help them do it right and raise money and stay out of jail.
My name is Brian Tubergen. I'm one of the founders of Coinlist. Coinlist is a financial services platform for the next generation of technology companies. Today, we aim to be the best place for the best companies to run their token sales.
So let's talk about, I assume everyone here is generally familiar with ICOs, so I want to dive in right now to what are the challenges that everyone's facing right now. And I'll leave it up to you guys who wants to jump in first, but what do you think is the biggest challenge facing both someone who wants to do an ICO, but also, like one of the companies you're running, challenges in working with people who do the ICOs? Why don't we start with?
All right, yeah, so there's there's a number of challenges. If you're an entrepreneur and you're looking to launch an ICO, I would say the biggest challenge is being the signal in the noise, because there are so many competing projects. Even if you have a very high quality project, it's very difficult to get attention. It's very difficult to stand out from the crowd. The second biggest, I actually should rank this one higher. The first biggest problem to both the issuers, the companies that work in this space, as well as anybody else who's touching it, is the regulatory aspect. It is very difficult to do this in a compliant manner, specifically here in the United States, and reach a large number of people. If you're doing it under an exemption, then there's going to be restrictions. If you are not doing it under an exemption, then you're probably opening yourself up to some risk. Now, I'm not a lawyer, and nothing I say is legal advice. I'll give that disclaimer for everybody up here except for you.
No, what I say is legal advice either.
So yeah, I mean, one is standing out in the crowd. Two is doing it correctly and making sure that you're complying by the rules. That's the problem that we're trying to help solve.
I would just add that again, this is hard. Like doing ICO, people think, oh, I'm just going to launch an ICO, and I was talking to some people out there, just snap your fingers and raise $100 million. I would bet you $100 million you won't do that. If I'm wrong, I want some tokens, but it's just not easy, right? And like again, like our stance on it is like we have 10 years of data on crowdfunding, and this is no different. Like every project that's raised money on any type of crowdfunding, which again we see this has done a lot of preparation, has done a lot of homework, has very solid teams, has very solid lawyers in place, has everyone, marketing machines, everything's ready to go before. See, I was telling you guys this analogy earlier, like the wave has already started before they launch, right? But like people think you just start here and ICOs are easy. So I would say the biggest challenge right now is education. That this is actually very difficult to do, and never mind, we could spend 57 days on the regulation, so that's like a whole other panel. But yeah, regulatory will get figured out. Regulation's a good thing. It is. Regulation's great. Seriously, every industry on earth that people have ever made goblets of money, regulated.
I think the second part of your question is what's challenging as one of these platforms that's trying to help companies walk through their ICO or facilitate their ICO. And I think the answer is back to exactly what you were saying, which is ICOs are really hard. Often you're working with first-time entrepreneurs who have never run a proper fundraise before, and all of a sudden they're aiming to raise $50, $100 million. And there's so many different components: legal, regulatory, marketing, plus just a traditional fundraising effort. And so trying to hold the hands of these companies and these first-time founders through this process is probably the most challenging part for us as a platform helping facilitate ICOs.
Yeah, I think from an investor standpoint, the issues that we face sometimes is there's so many projects out there, and you have to really do due diligence on all of them. It turns out that there's no offense, but a lot of shitty projects out there too. So I think there's going to be a shift right now where the most or the very successful ICOs, they will only be private ICOs. People.
What do you mean by private ICO?
Private ICOs, it's essentially a private token sale that's not open to the public. So the space for really good deals right now is so competitive to get in. The Andreessens and of this world, they would just jump in, take the full round, and then other people would probably get in later at the 5x of the valuation. What that means for an entrepreneur is you want to meet the right investors very early on, and you have to have a convincing project. And one of the things that we encounter when we speak to especially first-time entrepreneurs is I always ask them, why do you need an ICO? Well, sometimes the answer is I just want to bypass traditional venture capital. Whether or not that's a good idea really depends on your project. What we always ask is, why do you need blockchain? And that's where most entrepreneurs stumble. So if you can't really answer that question, then you should prepare yourself a little better.
So give us an example of an ICO where you think it made sense, where they needed the blockchain and where it was the right thing to do.
Well, I think any ICO where there's an intrinsic value in the token, where essentially you need blockchain technology for this company to succeed. So for instance, I don't want to advertise too much, but I think StankChain, for instance, is a great project. I don't know how familiar you guys are with that, but
It's exactly what you think it is.
Yeah, it's essentially it's a state channel payment system for the adult entertainment industry, and it's there's an industry that hasn't been disrupted forever. We saw the company before they did their ICO. Now we're very close to the founders, so I think it's a great team, and it's they empower people, right? So it's not that we want to invest in porn, but it's also an industry. So in the blockchain, for what they do, it's because it's a bidirectional state channel. It's great. It's revolutionary and can also be used in other ecosystems. Then there's other projects that we see, and I don't really want to name any specific projects, but there's we just do Uber for X, and we need blockchain. Like, no, you don't. In the Uber example, you might put it on the blockchain, but there's just so many projects out there where they just want to raise funds, and it's dangerous for both entrepreneurs and investors. And I think it's really important for people to work with those people and educate everyone in this ecosystem, because we all want to be inclusive, right? And there's going to be so many great projects in the next 5 years. But if investors start losing the trust, entrepreneurs won't be able to raise funds, and we don't want that to happen. So it's really, bottom line, I believe is it's really important to understand blockchain first, build something that's really needed, and then we can build some cool ecosystem.
Right, I see you down there.
Yeah, I can speak to an ICO that I thought was very sensible. So recently, a company called Basis, formerly known as Basecoin, raised about $140 million on Coinlist, and their product essentially is a token which aims to be stable, pegged to $1. And the idea here is
like Tether.
Come again? Exactly like Tether, except the problem with Tether is Tether sort of relies on you to trust the random organization that sort of administrates Tether. In particular, Tether is backed 1-to-1, or ostensibly backed 1-to-1 by $1. Basis is different in that it's not backed by anything. It's algorithmically held stable by manipulating supply and demand. So it's actually kind of an innovative technology, but it aims to solve the same problem as Tether, at least initially, which is essentially that today's cryptocurrencies are unusable as a medium of exchange. I can't pay you in Bitcoin. Your salary would go up 30 or 40% over the course of a month. So you're either really rich or you can't pay your rent, right? Any type of sort of long-term contract is basically completely untenable with today's cryptocurrencies. So you need a stable cryptocurrency in order to sort of facilitate medium of exchange. Anyway, that's Basecoin, or now they've changed it into Basis. So the question is, why is an ICO sensible for them? Why do they need to raise $140 million? Well, a couple of reasons. One is because by having $140 million in the bank, they can sort of make their protocol more resilient to attack. They can sort of back their coin 1-to-1 with USD for a little bit, which sort of allows them to maintain this peg to $1 until their currency sort of sees wide adoption and natural network effects sort of keep it pegged to $1. That's reason number one. Reason number two that it makes sense is because from a business strategic perspective, by raising that much money, they're able to kind of suck some air out of the market, which means competitors to Basis are less likely to get funded because all the money has gone into Basecoin or Basis, and as a competitor or an investor in a competitor, you have to kind of wonder, how am I going to compete with this company that has $140 million in the bank? So both from a protocol perspective and from a business strategic perspective, I think it made a lot of sense for them to do that.
I see that. Patrick, what are your thoughts?
I was just going to add industry-wide. I'm going to answer just like generally industries. So we see thousands of projects every day, as you guys do as well, and we have a lot coming soon. So stay tuned. But like one of the things I find most interesting, I think are just easy to understand, right? So here's a few things I think should definitely be on the blockchain. Like the IBM guy was talking about supply chain. That makes total sense on the blockchain, right? That's what supply chain is, like tracking everything through the chain, right? So voting on the blockchain, someone needs to solve that, please. Votum is pretty cool. Those guys are trying to do it right. Like, someone's going to solve voting. Seems like, is voting a problem here in the US? Does anyone know? Right, like that's an obvious use of the blockchain. I think the food example of like tracing where food came from is, Portlandia joked about it a while back. Like, did the chicken have a good?
It's a great episode, by the way.
Did he have a great childhood? But like they didn't even know. They were like early blockchain people, right? Like that's exactly what it is. So I could go on and on, but like healthcare, I think there's a lot of interesting stuff in healthcare, or really in insurance. Anything where there's like lots of private data, like your social security number stored on all these systems, like it's just done better, I think, on the blockchain. So I think it's just like getting away from like all the ones you hear about, all the garbage, and like you know, it might sound funny, like this adult industry one, but I bet that's actually like a pretty, I don't know much about it, but it hasn't been, you know, changed in forever. It probably is a better way to do stuff in that industry on the blockchain, I would imagine. I don't know.
Yeah, I mean, people just can't bank, right? So the actors and actresses in this industry, they can't bank. So the blockchain is the only way for them to transact.
Yeah, so your question is around which ICOs needed to be ICOs, right? What token sales needed?
Yeah, what are compelling use
What are
cases?
compelling use cases? That's a great question. So that depends on what the token represents. If we're talking about a utility token, then there can be very powerful network effects associated with selling a part of your product or selling access to your product so that you get as wide distribution, as many people as possible who are going to be essentially prosumers. They contribute to the network, they use the network, and you can get a very wide network effect from a very early stage, which is incredibly powerful. You know, there are use cases for utility tokens that are more compelling than others. I think that staking tokens, such as what like AdChain is going for, and Numerai, those are incredibly interesting and can incentivize certain types of behavior. If we're talking about a security token, on the other hand, the reason why you might want to issue a security token is that this technology facilitates access to a global base that wasn't possible before. And so you can have a much wider audience of exposure. That also goes for utility tokens. A much wider audience of exposure, which theoretically will give you the best liquidity premium possible, the best price possible. So those are, you know, that's the question. What does the token represent, and what is its functionality?
And speaking about sort of where things are going, or what are the differences you see between here, what's happening in the U.S. and globally? I know there is distinctions. We have a much more different regime here, right? We have the SEC, the CFTC, but you know, all these technologies are meant to be decentralized and global. Are you guys seeing what's happening globally that you've seen when people approach you?
Well, so this is absolutely an industry that is not dominated by Silicon Valley, unlike the dot-com era. It is truly global. There are hubs all around the world, which is incredibly exciting. We're going to get a wide variety of projects and some really interesting use cases, and it opens it up to anybody and everybody who has internet access. In terms of regulatory regimes, you know, we know what's happening in the United States. We've had some enforcement action from the SEC. We've had some statements that every token is a security, or it hasn't seen one that's not. Perhaps facts and circumstances, maybe. Other places like China, they shut down the ICOs because it was just completely out of control, and they have very strict capital controls. Regimes like Singapore and Switzerland have given very clear guidance of this is a security, and it would be regulated as such. But these would be utility tokens, and we're not going to treat them like securities. That kind of clarity is what we need here in the United States. But it is truly a global movement.
How do you deal with those overlapping regimes? So you want to launch globally, but you've got Singapore saying one thing, Switzerland saying another.
So
and uncertainty.
This is where a regulatory or where a protocol, like the smart contracts that we issue, the tokens, they know the rules based on the issuing jurisdiction, based on where you are, based on, so if it's say a Reg D plus a Reg S, and you also want to follow the accreditation standards of Singapore and the 13 other countries that have it, you can write these laws directly into the code, whatever they are. And then the token it knows the rules and the boundaries that it has to follow. And it references a smart contract to see if you've been verified accredited, if you're from, say, Singapore, but if you're Vietnamese and there's no accreditation standards, then you can purchase a token. So whatever the rules are, they can be programmed into these tokens.
So Mike and Brian, how do your platforms, how does Indiegogo and Coinlist deal with those concerns?
Yeah, I mean, I think we're looking at it the same way. I mean, I think it's, again, we've learned a lot in equity crowdfunding, which we think is, like, the pre-sales that you see happening, like any of the ones done compliantly are already being done under, you know, securities exemptions, right? So File Point's a good example on Coinlist. That's another really good example of something that should be on blockchain. They did it under Reg D. They didn't have to, they probably could have just gone rogue and done whatever they wanted, but even they did. Reg D, by the way, for it is like the fancy name for how anyone's ever raised money in the last like 70 years from rich people, accredited investors, which is like not most people. Maybe some people in this room, but like not most people, which is fine. So we're partnered with a broker-dealer. We're a little bit different. We have a broker-dealer partner called Micro Ventures. They've been doing Reg D for about 8 years. they're a transfer agent, they're a broker dealer, they're a money transmitter. They have they like figure out the compliance for us. Our approach is, let's use the regulation that's already in place. And again, like Reg S is this one where you can actually, they don't distinguish between accredited or not accredited. It just means any investor outside the US can invest into a Reg S. But it's still under the jurisdiction of the SEC, even though it's international.
That's only though if you don't offer it in the US and market it in the US.
Are you a lawyer? There are some technicalities, again, I'm not a lawyer. But so, I mean, yeah, the way we're approaching it is like, look, like, we think the SEC, I personally think, I'll take up my Indiegogo hat, the SEC is going to have to figure it out, and they will. And just like equity crowdfunding still hasn't been figured out fully, they're going to figure it out, and we'll be ready when they figure it out. We're going to get beat by the rest of the world. They already are beating us, and the SEC knows that. I don't think there's smart people that work there. That
What do you mean beat though? You say we're getting beat.
if we don't figure out regulation and have a way to do this compliantly, legally, like a utility token sale or even a security token sale in the US, security tokens we can already do, but utility tokens, everyone will go offshore, and they already are. Like, every other one I talk to now is like, yeah, you know what, whatever, fine, we'll go do it in Gibraltar or Singapore or wherever. So we're already getting beat, the money's flowing, and it's gonna flow outside the US unless we find a way to bring it back to the US.
And I mean, just to add on to that, you know, very high quality projects, there's a lot of times it will come from outside the US anyways, so it's kind of hard, you know, if the US doesn't, you know, figure out the regulatory issues there's no way we can attract the talent from, you know, Asia, Europe, wherever you name it. So those people, they will just already stay because there's no incentive. Silicon Valley once had this, you know, amazing opportunity, but there's so much synergy, so much talent in one place. That's why Silicon Valley. You know, other people are looking out to it, but if it doesn't allow to run ICOs from a legal compliance standpoint, that's an issue. And I think, you know, people are working on it, but, you know, we got to be very quick because other companies are already catching up with this.
And Brian.
Yeah, historically on Coinlist, our issuers have been holding all investors, both domestic and international investors, to U.S. standards in terms of KYC, AML, and accreditation.
And just so everyone knows, KYC is know your customer, AML is anti-money laundering.
A lot of acronyms in this. A lot of acronyms.
And their counsel feels comfortable with that because U.S. standards tend to be the most stringent. So that's what they've been doing over the past few months. Increasingly, we may see companies hold U.S. investors and international investors to different standards, holding U.S. investors to the standards required by that Reg D exemption that has been mentioned, another random term, and holding international investors to that Reg X exemption, which has also been mentioned.
Yeah, here's the thing, is that, you know, I'm assuming that most people in this room are citizens of the United States and have the ability to reach out to their legislators and their lawmakers. And we need to engage with the regulatory bodies, with our elected leaders, and let them know what we need in order to facilitate entrepreneurship. You know, no lawmaker in the world wants to stifle entrepreneurship. None of them want to kill jobs. That's just a fundamental tenet of being an elected official. But there are problems with the existing regulatory framework that the industry has to work with, and it's a global competitive environment. In the United States, there's no guarantee that the United States will win it. With that being said, we do have a fantastic legal framework. You know, we have property rights. People want to do business in the United States. If there was a very clear way to do it compliantly, and most importantly, access everybody who wants to be a part of this, that's the real problem, is that the current processes cut out 99% of the US population. That's the problem. So I encourage you, next time when you go home, you know, call your lawmaker, get involved, vote, you know, make your voice heard. Hey, give us a solution to this, figure it out.
And I mean, speaking of what do you view as the biggest regulatory problem of the regulatory issues you face? Is it the AML, the KYC, is it the anti-money laundering of your customer, which is more of a FinCEN issue, or is it more the SEC? Is it the CFTC? Who do you view as sort of the biggest obstacle for the U.S. becoming a leader here?
I would say that it is the current framework that we have. If you're going to do a Reg D offering, which is a compliant way to do it. But again, you have to make over, $200,000 per year or have $1 million in liquid assets. those are the only people who can participate in your token sale. If you're looking to create a platform where you have this token that everybody uses to access your network, you're only going to have 1% of the US population who can use your software platform. That doesn't work. And if we're trying to facilitate if we're trying to reach everybody, the current framework doesn't work. Now there are some other exemptions around Reg A+, Reg CF, which do exist. They have their own limitations. So I would say that the SEC is the body that I would like to engage with and have them provide more a cleaner pathway to do this. I don't think KYC is a big problem. I don't think AML is a big problem. I mean, most people, you hand your license over to buy beer or whatever. Most people are okay with going through a KYC AML process, but most people aren't millionaires.
Seem to be transitioning into this space. I mean, what insights do you have from that maybe you wouldn't if you just were already jumping into this space and knew? What succeeded, what's failed, what have you seen?
Yeah, so I mean, again, we've been doing what's known as like perks, traditional crowdfunding. You give money, you're not actually investing, you get like a product. It used to be like a t-shirt, now it's like a hardware product. The insights that really come from us, we've been doing, again, equity crowdfunding for like 2 years now, and like that, it really, I believe that these token sales, especially when we're talking about this regulation, it is just equity crowdfunding on steroids. Okay, so it's like equity crowdfunding, but there's like a couple more components. So I think what we've learned is that I would turn it around and like this is, again, it's the number one key to crowdfunding is momentum, and crowdfunding is about 85% marketing. Okay, don't quote me on either of those, but that's kind of what I think. And like we have 10 years of data on this. And I know it's like, oh, we haven't done 10 million ICOs, so fact, but we think that a lot of that transfers. I think one thing we're talking about too is like, it's not only like where do you want the investors to come from, but like where do you want your users, right? So I think what people forget here too is that like, Indiegogo, we look at it as like we built like the greatest market research or like market development platform on the planet where you can actually get in front of users and customers and get real-time feedback, good and bad, right away. And we have like startups using us and we have Fortune 500s using us to like access their customers. I think ICOs are just a fundraising vehicle, but you also need to look at us as a like marketing promotional vehicle to get you in front of your customer base in the US, but also to get you in front of our customer base globally, right? We've been global from day one, right? People think Kickstarter's a great brand, good for them. They've kind of started to be global. We were always global. We've done projects in 232 countries and territories on Earth. I didn't know there were 232 countries and territories, so I started working in Indiegogo. So I think it's just like, we have like all these systems in place, all these lessons learned that like, again, just goes back to what I said before, like, this is not easy, and this is more than just complying with regulatory. Anyone can comply with regulatory with a good lawyer and good counsel. But like, not everyone knows how to like market, brand, find a good use case for their token. Like you need people that are like building the tokens, doing the software, have a market to get it to. Like we all add some value to the space, and like that knowledge I think is very important.
So speaking about building sort of community through marketing or this network effect, I mean, what have you seen, you're an entrepreneur, let's say you get the right lawyers, you've got everything set up. What are the steps you can take, or what are the steps you should be thinking about to take to build that community, to do that marketing? What do you see that succeeded? And any of you jump in.
So bounty programs are incredibly efficient ways to reach.
Unless you ask your lawyer.
Right. So I'll get to the reason.
Ask your lawyer before you do that.
We'll go ahead and say that most token sales should not do them. However, the question was, what have I seen in the past that's worked?
Can you explain a bounty? Can you explain a bounty?
So bounty program is essentially like, let's say, it's either, you can think of it as like a influencer marketing or a referral network reward system, where if I send you my link and then you participate and you tweet this out and get 100 people in, then you get rewarded for that. So it's an influencer marketing type thing. You can also earn bounty for things like translating the white paper into your native language, or retweeting all the tweets, or reposting all the posts, whatever behavior that you want to incentivize. Again, tokens are very good at incentivizing different types of behaviors. Now, the problem becomes, well, what if this token is a security? You can't necessarily treat a security and reward people with securities. There's a lot of regulations that your lawyer has to walk you through, and if your token is a security, then you're probably not going to go down the bounty program route. But that is a very efficient way. Telegram has become the default location for these groups and communities of interest to come together. Having a strong Telegram group, a client of ours, Referium, they broke all the records in terms of the quantity of members of these Telegrams group, hitting 50,000, 100,000, 150,000, and not surprisingly, their token is all about referrals and building up communities of interest. So he's alluded to this a couple of times. You do absolutely have to have a lot of interested parties in order to have a successful token sale. At least it definitely helps. And so those are the things that you do, but hire a lawyer and let your lawyer tell you whether or not you can do it.
So Telegram and bounties, what else do we have?
One thing that you've seen a lot of companies do recently, which has become popular, is something called an airdrop. It's a very simple concept. Basically, companies just give free tokens to people. The problem is, and I should say what the goal is. The goal is basically to acquire early users, early developers who are going to either support your protocol, evangelize it, use it, build out technology on top of it. The problem is, often these tokens may be a security. It's sort of unclear which ones are and aren't, but responsible CEOs ought to take a conservative stance, because if your token does turn out to be a security, you can get in a large amount of trouble if you give it away for free and don't comply with an existing regulatory framework. And this is one place where talking to your lawyer probably won't help, because if you talk to lawyers, nobody really knows how to do a compliant US airdrop right now. At Coinlist, we have a product that we think works, but there are some snags that we still haven't worked out. So right now, nobody really knows how to do a compliant US airdrop. And so this is one sort of area where a lot more regulatory clarity would help a lot. You can do these to international in a compliant way, but right now, there's no way to do it to US citizens, which is really a bummer, because what these companies are doing is giving away tokens for free. They're not asking for money, anything along those lines. They just want to give you free stuff. But there's actually no compliant way to do it right now, which is remarkable.
To answer your question, so here's some advice: go build something. Put your head down, build something. Like, build your business, get some traction. Forget about the ICO, forget about the fundraising. Like, there's gonna be the occasional ICO fundraise that has like an incredible team that's backed by Andreessen, that's like, everyone's gonna throw money into that, right? It's the follow the leader thing, which is great. And those are awesome projects. Those are very few and far between. Our experience in crowdfunding, like I'll use like a hardware as an example. It's the same analogy, like a hardware product in Indiegogo, like it's not a mistake when those ones do really well, right? They have a lot of planning that goes into it, and guess what? Like, they're probably already at working prototype stage and have like a tangible, real product that they've already tested and like actually built for like 2-3 years. Okay, so I think it's starting to transform now, where there are a lot of people that raise money on a dream. It's going to start to be more and more of like, if you want to go raise money, my advice to you, like how you can prepare is go build your business. Like, don't get it, like, not everyone's going to raise $130 million to go like build their business and have this like war chest. I hope you can do that, but it's not everyone. So like, put your head down, stop trying to do an ICO because it's trendy, and when you're ready to do the ICO, when you have some traction, guess what investors like? Traction, right? Like, investors like team, and traction, right? So like, go build. So team. Well, team's like the boring, obvious one. You're like, what do you invest in? We invest in team.
Well, I mean,
of course they invest in.
Yeah, but I do believe it's really, really important still, and just
it's incredibly important, but we don't. Yeah.
Well, I mean, complementary skill sets are great, but like showing an actual working product is even better, right? So like, if we can
say better than I did, there you go.
If people can see that there's an active GitHub, an active GitHub community, for instance, in the case of an ICO, great. But I totally agree with everything that has been said right now, where so Navarro from Angels actually tweeted that. It was a very famous tweet. He said, "White paper is the new debt." And like, I couldn't agree more, because now everyone all of a sudden has a white paper. Like, you probably don't need a white paper. You probably don't even need to run an ICO, to be totally honest. And if you want investors to come in the seed round or beyond, they will look at the product. Hopefully there's a product. Only I believe from my venture experience, only successful serial entrepreneurs have the ability to raise on debt. Anyone else needs a product. and the product needs adoption is traction, and that's how you raise a lot of money. Plus, for getting a prototype hacked together, you don't need $130 million. In the case of Basis, the team is incredibly well. We're also an investor, and sometimes it does make sense. I believe that a lot of projects should probably not have an ICO in the first place, and that traditional venture capital or any angel round might be an easier way to go about it.
By the way, if anyone wants to jump in with a question, feel free to.
Yeah, I've heard Basis mentioned a couple times now. Do any of you have thoughts on Tree USD?
Yeah, I do.
No problem.
Yeah, I'm just trying to be careful about what I say exactly. I think they're interesting. I mean, they're basically tethered with better government, so they're back one-to-one with USB. I don't know how well they can scale, and I think Basepoint in the long run will probably be a better solution if Basepoint works, simply because the way the true USB system works, at least as far as I understand it, is there's a little bit of a transaction fee baked in, which gets paid to token holders, I think trust token holders or something along those lines. Basepoint, it doesn't cost you anything to transact with it. So that's a pretty core advantage. I think if Basepoint works, Basepoint will be superior. The question is, can a currency which is not backed by anything work? And it works in the case of the dollar, but the dollar of the U.S. government isn't exactly analogous to
Bitcoin.
Yeah. Well, but Bitcoin isn't pegged to a dollar. It doesn't have stable value. The whole point is that these currencies have stable value. So can something that has stable value that isn't backed by anything exist?
Well, has there ever been a currency that had a stable value?
Well, you would say no.
Right.
So, but I don't know. I think a lot of people would say that say that. Well, the answer is no. But the reason why is because sort of traditional central banks, etc., have different incentives in something like Basepoint. They have an incentive not to, for example, to inflate the value of the currency, to create economic growth or something along those lines, keep employment high. They have different goals. Basepoint has one goal, which is to keep the value of the currency stable. So it's possible that they will succeed where historical currencies have failed.
Patrick, I think you wanted to comment.
Yeah, I was just going to say, it's stable relative to what? It's a relative question. So yes, perhaps. In a lot of cases, no. There's really 4 classifications of stable tokens, and there will be a $1 trillion stable token at some point in the future. I don't know which one it is. There's the first ones that we saw, which is Tether. Tether is a centralized IOU. So you put $1 in the bank, you get 1 Tether on the blockchain, so it can move around on the blockchain. The next phase is collateralized. For example, MakerDAO is a collateralized stable token, so you would hold Ether or Bitcoin, or their plan is to also collateralize equity and other assets. And then you get a dollar representation based on the collateral. The problem with that is that you have to over-collateralize in order to hold that in the event that the value of the underlying asset goes down. The third type is, like Basecoin, seigniorage shares, which essentially follows the quantity theory of money. When demand goes up, you issue more. When demand goes down, you try to pull tokens out of circulation. There's different methods for this. Bonds are a method for this. And then the fourth type that we've seen is synthetic dollars. This is the ABRA approach, which is basically setting up derivative contracts for differences on the back end. And so you're holding Bitcoin, but there's a financial contract on the back end that's taking a long-short position. So those are the 4 categories, and eventually we will see a stable token that just dominates.
It's got technical real fast.
It's interesting you said dominates. There's so many developers now, like the City of Zion guys are trying to do a stable token for the coming NEX exchange. Do you ultimately see several stable coins being listed on various exchanges where the consumer then, or the whoever's trading, can choose what they wish?
Perhaps in the short run. I think in the long run, though, a purpose of sort of money is to be a unit of account, and people can't hold their heads prices in different currencies. Typically, things are priced in one currency, and so if a stablecoin does achieve some kind of long-term adoption as a medium of exchange and a unit of account, then probably there will only be one, simply because it would be weird as, say, a merchant to be showing prices in multiple currencies.
But there will be different stable tokens of different currencies. Again, it's relative to what? So you have one relative to the consumer price index, one relative to the euro, one relative to the dollar. So there will be
Yeah, do we have a lobbying group in this space?
Yes, there is the Digital Chamber of Commerce. There's Coin Center, and then there's some other. There's others that are smaller and less visible.
There's not a formal lobby group, but there's a safe harbor group that it's now public knowledge. It's been in all the papers where Andreessen or Unisquare Ventures, Andreessen, some of the top VCs, and then Perkins and Cooley, and you see Perkins in the front row here, like those guys. So some of the top firms in the space, and some law firms, and some of the top VCs have been meeting regularly with the SEC. So being, again, proactive about this, which I think is the way to go. So people think like, the SEC, again, and we've all noted this, like they're doing I actually think they're doing a great job. Like their job is to do their job, right? To like keep us all safe, keep people from like losing their house, keep it, So like, they're gonna figure this out, they just don't understand it all yet. And they're working through it, it's complicated, but like, people are regularly meeting with them to like say, hey, this is how this works. Here's a good example of something done legally that we think actually does have utility, et cetera, et cetera. I think they're open to figuring it out, it just takes time.
Let me actually clarify my statement. Coin Center and Digital Chamber of Commerce, I actually don't know if they're registered lobbyists. They are trade representative groups. Clarify that.
So,
Hey, can I just ask a question about that? Is this protocol? The what kind of investment round was that? Was that a private equity or because when an ICO, right?
So there was
It was a private pre-sale. It was done under Reg D. They bought our share tokens, which is not stablecoin in Basepoint's protocol. Basepoint's protocol involves three different tokens. It would obviously make no sense to invest in something which is meant to be stable. So instead, they invest in this thing called share tokens, which essentially the price essentially should be correlated with the expected future market capitalization of Basepoint at any given time, which is kind of complicated to wrap your head around. But essentially, as Basepoint becomes more popular, the value of the share token should go up.
My real question is how many investors that invested in that knew what they were investing in specifically? And I know, just knowledge-wise, right? It's so complicated, as you can hear, that it's like, this stuff's all very confusing. And my worry is like just education. And like, this is a very complicated like protocol level token, stable, like these things get so complicated so quickly that I think one of the reasons actually the lawmakers are limiting it to accredited investors, because their argument has always been like, oh, these people can afford to lose their money because they're wealthy. But it really it's sort of backfired when they created the SEC in 1930. They always pegged it to like how much money you had or how rich you were, which doesn't necessarily correlate to intelligence. I don't know if I'm president, but so like it's just stupid. It's like a stupid premise. The accredited investor premise is stupid.
Yeah.
It's stupid. It makes no sense. You can build laws, and there already are rules, like in equity crowd or anything, like, oh, you only make this much a year, you can only invest this much a year, so even if you lose it, you're not gonna lose your house. Like, there's ways to regulate this stuff that doesn't have to limit it to just rich people. The reason we're limited to rich people, because we don't yet know how to do it, and it's the only way to say like, well, at least they're rich and we're not gonna like destroy the economy. Seriously, that's like how people are thinking about this right now. We're doing the same thing. Like we're following regulations, but our dream is that this becomes available to anyone, anywhere. Like that is really the future of this. It's not just limited to rich people under regulation.
So there's three coins in that protocol. Which
we want to move on past Basepoint.
Yeah, let's
Turn
talk
back
about
really
to ICO. If you don't mind, we'll just turn back to ICO stuff and feel free. These
Brian will be here.
These guys will remain here afterwards. And just turning back to ICO. So what can you do to make sure, what are some of the basic steps you can do to make sure you don't get a knock on the door from the SEC? And I know from my own experience, they're knocking on a lot of doors. I'm representing a lot of people in front of the SEC right now with ICOs. What are some basic steps you can do? What are the most basic steps you would suggest?
I would say just work with good counsel and follow like known securities exemption. But if you raise a lot of money in an ICO, you're going to get subpoenaed. Pretty much every company who's raised a lot of money is getting subpoenaed, and that's not necessarily an indictment of them. I think the SEC is just handing out these subpoenas so that they can learn. But you're going to get a knock on your door from the SEC.
It doesn't feel like a lesson you want to learn when you get one of those. Just
So, yes, that's absolutely.
But they're doing it for pretty much every company that I know that's raised a lot of money in ICO, regardless of how legitimate you are, is getting contacted by the SEC.
What is your definition of a lot of money?
I don't know. someone would find some company that raised more money but didn't get subpoenaed.
If you raise millions of dollars,
Right.
it's likely to
Right, right.
receive.
So subpoenas are a request for information, correct?
There's two
There's
things.
RFC.
You can receive a request for information or you can receive a subpoena.
So have most received a request for information, I believe?
No.
They've actually received subpoenas, but so my argument is this, and again, I'm not a lawyer either, but if this was, they'd all be in jail if this was like, you know, oh my god, everyone's doing this wrong. But my theory is, my personal theory is, they're just trying to learn. Some of these people have definitely like just done it on their own and probably have done things not correctly, if you will. But I think there's the good ones that like are probably not gonna go. They're probably just trying to learn. Maybe they'll find out it was done, but like again, the thing that you can do to protect yourself is get good counsel. They're not really, in my mind, I could be wrong. I don't think they're going after someone that's trying to do things right. You may not get it all right because it's complicated, but like at least you're doing your best to do it right. I know there's laws you might break, like, but like, don't just go rogue and just the people that raised a ton of money before these like the SEC even got wind of these ICO things. I think, you know, just do it right. Get good counsel, listen to them, don't go too fast, follow the rules, and like I think you'll be okay.
Are they like US-based companies that are in subpoenas?
They can subpoena companies anywhere in the world.
A lot of them have, pretty much all of them have.
So it doesn't matter where you're located in the world. That's not a way to get around their jurisdictional reach. So let's talk, we're almost done here. Let's talk about where things might be. Like we come back here next year. All of us are here again. Hopefully, maybe we'll do something different. But this is a great conference. But what are we going to be talking about next year? Like what's going to be, where are ICOs going to be next year? Milan?
I think that airdrops are a great way to promote your product, and I think that it's gonna shift a little bit from the ICOs that we have right now towards airdrops. And I can also imagine that there's going to be a lot of private ICOs. That's what I said earlier, just because the space gets really competitive, and from an investor, like even right now, it's very hard to get into those super good deals where everyone wants in. So I think for the broader audience, we probably going to see airdrops. If you hold a specific token or coin, then you will get airdrop another one in order for you to adopt. And I think speaking of adoption, I think that's the most important thing that we all have to figure out. We all should be working on this together. Is like how can we drive adoption of cryptocurrency from the currency level, but also how do we implement blockchain pretty much anywhere we want to implement it. And I think now, next year, back to your question, I think if we keep building great projects, whether or not they will be fine with an ICO doesn't really matter, because at the end of the day, what matters is that this technology will survive and we can all make use of it.
Patrick, where do you see things?
Well, I try to not make predictions about the future, but here we go.
What's the price of Bitcoin?
Disclaimer. Don't take anything I say.
Everyone's displaying
We spend a lot of time with lawyers, like
Okay,
robots.
so,
Don't say anything.
We will have seen a lot of ICO projects that have launched so far have failed. We will see a handful of projects that will have succeeded extraordinarily. We will see the quantity and quality and total dollar amount of ICO industry larger than it is today. I also think that we'll see many more security token ICOs. I think that we'll see an IPO that is actually an ICO. So it's a floating of a public company, but done on a blockchain-based ledger. Again, don't hold me to that.
Yes, security tokens. I hope that within a year, the SEC will have some sort of framework for utility tokens. Not going to hold my breath, but I hope
Don't
that.
count on that.
I said I hope. So then my real prediction is that security tokens, again, just so everyone knows, when we say security token, we mean like equity in your company just on the blockchain. Okay, so it's just a better way to issue equity. And Reg A Plus was mentioned. I see Chia in the audience. I know you guys are touting that one big. Like check that out. Like we've been doing that for a while. Reg A Plus it already exists, right? There's already ways to raise. You can raise up to $50 million from anyone, not just accredited investors. It's expensive to do. The reporting's a nightmare, let's be clear. Reg A Plus is not good for every early stage startup, so there's issues with it, but I feel like there's gonna be a lot more like people that are like, oh, I just wanna do an equity raise, a traditional equity raise, but I wanna do it on the blockchain. And it's just gonna be a security token, again, that you have a token that represents ownership in that company. I truly believe like that's gonna start happening more and more and more.
So ICO could replace IPOs in the future?
When IPOs is so much
question
more
is, are ICOs going to replace IPOs?
look at what's happening in the traditional stock markets, right? ASX, Australian Stock Exchange, they're replacing their clearing and settlement system with the distributed ledger technology. NASDAQ, of course, has made investments in this space. I'm of the opinion that a blockchain is a superior database for a lot of reasons, especially when it comes to keeping track of ownership of something like a stock. So you can still do an IPO in a traditional sense, but if it's traded and tracked on a blockchain ledger, then it becomes an ICO.
Yeah, I agree. At least in the long run, we'll see some kind of tokenization of equity. The trouble with going last is I think they basically took all the reasonable predictions. I do think you'll see more private sales over the course of the next year for a little bit different reason, which is simply that companies don't want to do big splashy public sales to avoid attracting too much regulatory scrutiny. I also wouldn't be surprised if you see sort of the implied valuations and the amount of money raised sort of both go down because the implied valuations seem too high given the stage that these token companies are at, and because the amount of money raised is just in excess of what they actually need. So I wouldn't be surprised if on a per company basis you see lower valuations and less money raised at some point, because right now things do seem a little bit excessive.
I would actually add one thing. I heard talk to a VC, which I won't mention the other day, that said we won't even look at an ICO unless they're raising less than $30 million. Which is like an arbitrage, that's arbitrary, but okay. Mark Zuckerberg comes in, you're like, sorry, you're raising $33 million, we won't talk to you, okay. But like, you get the point, like not everyone needs to raise $150 million, especially when you don't have a product.
And also, just to add on to this, in the due diligence process for investors, people would ask the question, what do you need the money for? And then they're like, well, it doesn't hurt. It's like, no, you gotta be very clear. It's like where do you spend that money, right? So
we need 2 kegerators.
in each of the 10 offices, right? And again, I think if you look at it from an investor standpoint, you want to have, you want to see a reasonable ask. And what if you don't have a product? I think you'll be fine with maybe less than 10.
Plus, how do you get a return on your investment in Telegram?
Well,
how much money is in that deal? 27 trillion. Like, seriously, how do you?
They're about to pay us, right?
It's unfair to start X company that runs a Telegram, but like seriously, like if you people forget that, right? Like if you invested around and they're raising like $700 million and the valuation is like $10 billion, getting a return on your investment becomes a little more tricky at that point. So just keep that in mind. You don't always need to raise tons of money.
Yeah, you always got to create at least as much value as you have raised money, right? At X valuation. So that's the whole point of raising money. That's how venture capital works. So at the end of the day, if you have a massive raise and you're sitting on hundreds of millions of dollars, we got to create a product that's worth hundreds of millions of dollars times X. So and that's where it gets tricky. So I think everyone probably here on this panel would agree that we want to see those valuations go down a little bit because it's better for the ecosystem. At the end of the day, everyone is in this to build a better future, right? So investors and entrepreneurs alike. And it's just the best to happen for everyone in the room. Essentially, if valuations go down, people are more reasonable in what they raise, and people actually start building instead of just putting together a white paper where there's nothing behind it.
We're making the world a better place.
Yeah.